Welcome, everybody. My name is Raymond Aravello. I'm the Assistant Director of Alumni Programs here at Rice University, and welcome to the Young Alumni Life Series. This is Smart. Smart buying techniques for car buying. We have two panelists here today who are going to go over some car buying techniques with you, Eduardo and Albert. I'm going to have them introduce themselves, but before I hand it over to them, just a few housekeeping rules here. If you could use the Q&A feature on the bottom of your screen if you have any questions for our panelists, and we'll try to get through all of those as soon as we can. And of course, in the chat feature, tell us where you're tuning in from. At the end of the webinar, there will be a survey, so be sure to complete that survey out. We'd love to continue this program and offer different topics. So if you have any suggestions, you could mention those in the survey as well. So without further ado, I'm going to hand it over to Albert and Eduardo if you both want to introduce yourselves. Oh, you're on mute there, Eduardo.
How about now? Okay, awesome. My name is Eduardo Hernandez. I graduated from Rice in 2012. I was at Lubbock College. I majored in biochemistry and cell biology and religious studies. And now I am the Chief Operations Officer at Dealermart. We're a used car dealership that focuses on offering auto financing for the subprime market with the quality service of a franchise dealership.
Awesome. Good afternoon, everyone. My name is Albert Nabiullin. I'm a 2018 Rice grad. I was in McMurtry College. I studied math, econ, and since graduation, I've been with Capital One Auto Finance in our Plano, Texas office. I've been with them for about 3 years now. So excited to have this conversation with all of you today.
Perfect. Thank you both for being here. So we'll start off with our first question here. What is the primary mistake you see people make when shopping for auto loans?
I can go ahead and get started on that one. I think the biggest mistake is not knowing your credit worthiness. And what I mean by that is a lot of people go shopping for a car without even knowing what their FICO score is, or, what their previous credit history looks like. So I think the biggest mistake that I see is people not really understanding what financial and credit situation that they're in. And there are really easy ways to remedy this. There are a number of tools that will show you your credit report or your credit score. They're free to use, and you can even check it on a daily or real-time basis. So that would say the biggest mistake from my perspective.
And to add on to that, I think, another mistake that people make when, looking for auto loans is, overlooking and not understanding the terms fully, looking at your interest rate, the terms of your contract in terms of how many months you're going to be paying and your monthly payment, and not seeing what the overall amount of money you're going to be putting in if you see that term to completion. So, that's pretty important whenever you're shopping for an auto loan, is to check your interest rates and the number of payments and calculate, okay, so the car is, $20,000, but I have, a 10% interest rate and I'm paying for 72 months. Am I going to be paying $20,000? No, I'm going to be paying, probably close to $35,000. So, just really understanding what, how much you're actually going to be paying in cash for the car.
Perfect. Thank you both. And Eduardo, this next one is probably for you. So as auto loans, what would you say is the primary mistake people make whenever it comes to car buying?
Specifically at auto loans, it's just what I said, is looking at the interest rate and the terms, going with your first option. Another thing is, every time that you search for an auto loan, they check your credit, and that's a hard pull on your credit. And so, and now granted, I think, within a 30-day period when you're shopping for auto loans, it all show up as one credit to your account. So, you're not losing that many points on your credit. But, if you shop for auto loans, every 30, 60 days, those hard pulls, are going to show up as separate hits on your credit. And so, that could, affect you in the future if you're looking for an apartment at the same time, or if you're, applying for any other loans, it's going to show a history of you applying for auto loans again and again. So the important thing is to make sure that you are, what you want to get, and, what you can finance and afford. And, like what Albert said is, understanding what your credit is and what that's going to do for you, is pretty important, as well as, your income and your residential status. All those things are taken into account whenever you're applying for an auto loan.
But thanks for that. Does it make any difference when putting more money down for a down payment when it comes to a vehicle? And whoever
I would say definitely yes. While there's no like industry standard like you have for mortgages, maybe a lot of y'all have heard of, put at least 20% down on your mortgage. There's not real that standard for auto finance, but I would say the more down payment that you can put, the better deal that you're going to get. It shows to, I think, both the dealership and the lender that you're going with that you have more equity, you have more skin in the game, so to say. And for every dollar you're putting in on a down payment, that's a dollar that you don't have to borrow and pay interest on. And as Eduardo mentioned earlier, just because you have a $20,000 car loan doesn't mean that you're just paying the principal of the $20,000. You're going to be paying the interest payments. So definitely, putting in a higher down payment is going to help put you in a better place, not just from the personal finance perspective, but maybe even the interest rate or the lifetime interest that you'll be paying over the course of the loan.
Mm-hmm. And I don't know how many of you guys watching are aware of your credit, but once you start veering away towards or from the prime credit range, you start getting below 700, 650. The down payment will determine your loan. So I deal with a lot of subprime customers, and with the outside financing options, they usually require 15% of the principal as a down payment, to secure the loan, and sometimes it's higher the lower your credit goes. So that again, that brings it back to understanding your credit and what options that's going to afford you.
I'll offer a quick anecdote. Back in 2017, I was actually shopping for a car. I was looking at a little Hyundai Elantra I thought was, pretty good and within my price range. And the F&I manager ended up submitting my application to, I think, 5 or 6 different lenders. And only one of them said yes to me. The others all said that, hey, your FICO looks good, but you don't have, good credit, like a good thick credit history. And the only reason they said yes is because I put a substantial amount for my down payment. It was something ridiculous, like 50% of the entire car. And now, while I don't advocate everybody to put 50% down, because that's just not feasible for every car, it is a very strong signal, especially if you don't have as much credit history, that you can afford this car payment, and then you can get the loan that you need for the car.
Yeah, and that especially pertains to people that are just graduating college, that you might not have had a credit card, your entire college career. Your parents, might not have given you one, or you didn't apply for one, or, so when you graduate, you have, little to no credit history. And so you might be a great buyer, but, certain auto lenders are going to look at you as somebody that's unproven in your credit. And so they might ask for, more down, like with Albert there. And so, it's important to, really understand that, having a co-buyer might, or a co-signer might help also with that, like a parent or a relative that has good credit, because then the bank will see that as the co-signer is guaranteeing the loan in the event of, you not being able to pay or for whatever reason. So, that also helps with your approval.
Perfect. Thank you both. It looks like we have a few questions coming in the Q&A. Thank you for our participants for doing that. First question, is it helpful to be pre-approved for a loan so you know how much you can borrow?
I can
Yeah.
take that.
Oh, go ahead.
Yeah, I'd say the pre-approval, the pre-qualification, those are super, super helpful. You can get them from a variety of institutions. I think both from local credit unions to big banks. And I think the biggest benefit to it is, like Eduardo mentioned earlier, when you go into the dealership and you submit an application, it's going to be what is known as a hard pull, and it's going to show up on your credit history and potentially may ding your score by a few points. But the pre-qualifications or the pre-approval essentially tell you and the dealer that, hey, their credit is good and they more or less can get financing without having any negative impact to your score, because all of that is considered a soft pull. So I would think of the pre-approval or the pre-qualification as you're kind of playing with a deal before you actually pull the trigger and finalize the terms of the deal and have that hard pull happen. So definitely would recommend shopping around for a pre-qualification or a pre-approval.
Mm-hmm. Yeah, just to echo what Albert said, the pre-approval, and you usually get that, you probably get those emails from your bank if you bank with Chase or Wells Fargo or any of the major banks. Oh, you're pre-qualified for a 2021 Maserati, and you're like, okay, well, I'm not going to buy a Maserati, but at least you know that you're pre-qualified for one. Especially when you know what you're going to buy, that'll help you budget for the kind of car that you want. So you'll know kind of what price range you're dealing with. And so when you go into the dealership, you can talk to the salesperson and they'll know exactly what to put you in and how to frame it,
Perfect. Thank you. Next question. What are y'all's thoughts on bringing your own financing versus financing through the dealership to take advantages of dealer discounts or rates?
I'll start with that. I think, going with your own financing is usually a better option, because it's through your bank. They, have a history with you. They know you as a customer. And so, again, depending on your credit and your banking history, they could offer you a really low interest rate between 1% and 4%. It just kind of depends on where you're going as well. If you go to a franchise dealership, meaning like a Toyota store or Nissan or Lexus, one of those stores, the manufacturer has their own financing that usually offers really low interest rates as well. Once you start going into used cars or other auto financing institutions, that's when your interest rates start going up. So, in my experience with the customers that I've dealt with, when they come in with their own financing, they usually get much better rates and terms.
Yeah, I'll definitely echo what Eduardo just said. I think bringing your own financing provides you immense leverage in the deal-making process that you may not end up going with that bank that pre-approved you or that you brought your own financing. Because what dealerships will often try to do is they'll try to match your rate or beat your rate with a different lender that they have a strong relationship with. So it's essentially you're getting the best of both worlds, that if you bring your own financing, you know that you're getting a deal at least as good as the one you have in hand, but you might even get a better one because now you're making the dealer and the finance managers work for you. So if you have that, it is only helpful to you and not at all detrimental.
Mm-hmm.
Perfect. Thank you both. This next one, I think, is a pretty popular one. So what's something you should be thinking about whenever you're looking at buying a new car versus a used car?
So, new cars is pretty clear cut. It comes with the manufacturer warranty. It hasn't been driven before by, previous owners. Obviously, you're going to be paying more for a new car. With a used car, you're going to be paying less, but you can still find a quality vehicle, that's been used. When you're looking at used cars, a few things that you want to look at, wherever you're going, is to look up the reviews of the dealership. read them and understand, if this place has 3.5 stars and half the reviews are negative, talking about, how bad the service is and the cars are, you probably want to stay away from a dealership like that. And then you want to look at the vehicle's auto history. So, ask for the Carfax or the auto check and check to see the service history. Has this car had its regular oil changes? You could be looking at a 2016 Toyota Camry, but it has one previous owner, and on the Carfax, it shows that they've done 3 oil changes in the time that they've had the car. That's an indication that, the car probably wasn't maintained, and you might want to move on to something that has a better, service history. Other than that, the new cars, you know what you're getting, and the dealership and the manufacturer are going to take care of you within the first 100,000 miles or 10 years. You're or 5-10 years, depending on your warranty. You know that you're covered. With a new car or with a used car, there's risks, but usually you can get a really great deal and still have a great car.
Yeah, I think great points all around. Another important thing to keep in mind, if you're buying a new car, the depreciation on that vehicle is not a linear path. This is probably the most rice way of talking about depreciation, but it's not just a straight line like this. It'll drop off a lot right at the beginning when you buy the car. And anecdotes say, as soon as you sign on the car loses 30% of its value, and that more or less holds up. So that's another thing to be aware of. Versus if you're buying a used vehicle, a lot of that early depreciation has already taken a hit on the vehicle value, so that when you buy it, it is not going to drop in value immensely. But like Eduardo said, there are definitely good used cars out there and not so good used cars out there. One measure of a good used car is what is known as a certified pre-owned, or a CPO. And basically what that means is the car went through a rigorous check that has been endorsed by a specific manufacturer, and it usually comes with a slightly higher warranty than a non-certified pre-owned vehicle would. So if you're looking at used vehicles, I also recommend looking for that certified tag next to the vehicle.
Yeah, and then another thing you also want to be looking at is the mileage on the vehicle. The higher mileage vehicles, means that there's been more wear and tear done to the vehicle. And so its maintenances have needed to be accelerated. For instance, an oil change, is recommended every 3 to 6 months, but on the sticker, you look at it, it has a date of when you should do it, and then it also has a mileage, and it should be whichever comes first. So, if you're getting an oil change and it says the next 3,000 miles, you need to get an oil change. But it also gives you a 3-month period, but you complete that 3,000 miles in in a month and a half, you should get an oil change at that month and a half mark. And so not a lot of people with the higher mile vehicles usually do that. And you'll find that with like fleet lease vehicles or off rental vehicles, that you'll see a 2016, or I guess right now that would be like a 2018 with 60, 70, 80,000 miles, which is quite a lot. The average is about 15,000 miles a year for the average driver. So anything more than that, it means that the vehicle's been driven a lot. And so if they don't have a service history to kind of match that track record, there's the car has been worn more than it normally would have. So that's another thing to be looking at whenever you're looking at the vehicle for a used car.
Perfect, thank you. This next one's a 2-part question. What's your take on leasing instead of buying? And what's important when negotiating for a leased new car?
The difference between leasing and buying is that you don't own the lease vehicle. So, the way that I see it is you're just, paying a really expensive rental for, 1 to 3 years, depending on your lease term. And you usually have the option to buy the car at the end of the lease. But the way that I see it, buying it is definitely better than leasing, just because at the end of paying what you need to pay for, you're going to own the vehicle. You're going to have an asset that you can sell. At the end of the lease, you're just going to have to either lease again or buy another car, and that's 1 to 3 years of payments that that you're not going to get back. Negotiating for lease is like negotiating the terms of a loan. You just have to know where you stand with your credit and your income, and see what your options are.
Yeah, I think I'll echo a lot of that. If you are interested in a lease, I know some people really like having that flexibility of, I don't want to be tied down to a vehicle for 5, 6, 7 years. I want a new one every couple of years. A lease may be what you want and what is more preferable for your lifestyle, but just be aware that in the long run, you may end up paying more if you continue to lease vehicles instead of buying one. One important thing to recognize for leases specifically are some of the terms of use. So oftentimes there would be a limit on how many miles you can put on the vehicle. And the reason why there's a mileage cap is, because the asset is not yours, the dealership or the lien holder is trying to protect their asset in that leased vehicle. So just be aware of that. That is usually 12,000 to 15,000 miles per year. So a lot of drivers are going to be safe, but if you are someone that likes to take a lot of road trips, that's an additional thing to watch out for if you're looking specifically into leasing.
Perfect. Thank you both. Next question here. How long of a credit history is ideal, and at what point is it less of a factor?
It really depends on what you're looking for. Usually 2 to 3 years of good credit history is, going to put you in great shape. There's also, your credit, and there's also auto credit history as well. And so that's something that is looked at. You might have good credit, but you've been repossessed before. And so that not only affects your overall credit, but depending on how long ago it was, it could also affect your auto lending options. And so, as long as you have like a strong credit, FICO score and 2 to 3 years of good credit under your belt, you shouldn't have any options or any problems, I should say.
Exactly. I think it's not just the quantity of your credit history, but it's also the quality. So if you've had 10 plus years of credit history, but you had a repossession or bankruptcy or another like life circumstance that materially changed your credit worthiness, that is going to impact your score. Now, the fact that you have 10 years versus 2 years with a bankruptcy is going to put you in a better position. But I would not think of it as quantity or quality. I would try to shoot for both. Have a long history with good payment behavior and none of those bad credit occurrences such as a bankruptcy or repossession.
Mm.
All right, thank you both. What's the longest loan term beyond which a buyer is likely to wind up being upside down? I know that one's kind of specific.
You mean upside down in terms of where you are with the value of your vehicle?
Correct. Yeah.
It honestly just depends on your down payment and how long your loan is, right? So if you have a 7-year loan, which means that you're going to be paying a pretty low monthly, the point in which you get to, and you have a low down payment, right? You're probably going to be paying on it out of that 7 years for maybe 5 to 5.5, 6 years before you could trade it in without having too much, without being quote unquote under, because, like Albert said, as soon as you buy the car, for instance, on a new car store, the value of it drops immediately. So, you could have been paying on it 2 years and you think, okay, maybe I don't want this car anymore. I want to trade it in. And you're going to go to a dealership. They're going to ask for your payoff amount and they're going to match that against what they're valuing the trade in. And, if it's significantly less, than the value, they're not going to accept that as a trade. You're going to have to keep paying on it. So it really boils down. Now, if you have a shorter term with a higher monthly, you'll be paying the principal off a lot faster. So, you'll, be on the right side of that line quicker. But again, if you go in with no down payment or a low down payment, you're paying a low monthly payment for, 7 years, it's going to be a while before you've paid off enough of the principal balance for, that to make sense for a trade in or trying to sell it,
I've got nothing to add. That was a really great answer.
Thanks.
Perfect. And this next one is it's a specific scenario question. I'm looking at the first family minivan. I can get 0% APR for 70 months, $14K off MSRP, 7,500 EV tax credit. Is that a no-brainer?
I think it sounds good, but it's, I don't know your personal financial situation. It sounds like just because you know a lot of the numbers, probably know what your budget looks like. It sounds like a good deal, and I think right now is definitely a good time to buy vehicles. If you're buying a new vehicle, like you mentioned, you can get the 0% APR through the manufacturer finance, and then you get a lot of money off of the MSRP. Just be aware of the depreciation comments that we made earlier, and make sure that, even though you may be getting a good deal on paper, is it fitting within your lifestyle needs that you have, as well as your budget and your personal financing.
Yeah, exactly. And also, be aware of the other terms of the contract. There might be some hidden fees in there, or not hidden fees, but fees that are in the fine print that you maybe not be seeing it upfront, or they might be pretty strict on the terms of the contract. So just be aware of that. But I mean, yeah, it sounds like a great deal to me.
Perfect. Yep. And in regards to loan terms, what would you say are some ideal loan terms to look for that would be beneficial to the borrower?
Again, it depends on, one, the price of the vehicle, your personal financial situation. If you've got a great job where you can pay a high monthly without any problems, you probably want to pay the car off in maybe 3 or 4 years. But at the same time, if you've got good credit and you got a good job, but maybe you're trying to save up for something else, signing up for a longer term is an option. And you can always refinance. So you might hit that 2 or 3 year mark. You've bought the thing that you were saving up for, and you can afford a higher monthly payment now. You can go to the bank and say, hey, I want to refinance my vehicle. I want to pay higher, pay it off quicker. And, looking at, as long as you have a good payment history and, they verify your income and a few other things, they can refinance you and you can end up paying it off quicker.
Yeah, definitely. I don't think there's a one size fits all in terms of the term lengths. Generally, like Eduardo mentioned, the longer your term, the lower your monthly payment will be, but the higher your lifetime interests that you'll be paying. And refinancing is definitely a great option to look into. For example, if your cash flows are such that you need to take out a 6 or 7 year car note, but in 2 to 3 years you can revisit it because your financial situation has changed. You might be able to get a lower monthly payment without changing your lifetime payment, just because your credit score has improved. You've shown that, hey, I have the ability to pay off a car note where previously I've had no car loan experience. So you may be able to get a lower APR and the interest rate without having to change your monthly payment.
Perfect. Thank you. Next question here. How common is it to supply all of the money for a car up front? Is it possible to not have a car payment if you pay 100% of the cost upfront, or do most dealerships require that you do a monthly payment plan?
No, you can definitely pay cash, no problem. I love it when customers come and pay cash for their cars. It just depends on you. do you have the money to pay for it? And what kind of car are you buying? A $40,000 car? Do you have $40,000 plus tax, title and registration? Or are you looking for a used car to spend $10,000 and you got $10,000? That just kind of depends on you, but you are under no obligation to have, you're no obligation to finance, if you have the money to pay for it cash.
Yeah, exactly. I think, paying cash is going to reduce, you're not going to pay any interest because you already have, all of the money sitting in your bank account. One thing I will say is it may be beneficial to some, those that are responsible with their credit, to take out an auto loan, pay it for a few months, and then, pay the rest of the auto loan off. And essentially what that does is two things. At first, you get a good auto loan on your credit history, which shows that, hey, you're a responsible credit borrower. This unfortunately happens sometimes with people that pay cash for everything, is that their credit history doesn't look too good. And it doesn't mean that they're bad, it's just because they always use cash for everything. So one potential option is get an auto loan, have it for 3 months so it shows up on the bureaus, and then pay the rest off. You're going to be paying a little bit in interest, but in the long run, the benefit you have of that good auto loan on your credit bureau is going to outweigh the few $100s of interest that you paid over the 3 or so months that you have that auto loan before closing it out.
Perfect. Thank you both. So you had mentioned Chase and Wells Fargo earlier. Can you give your thoughts on big banks versus credit unions? What are the advantages and disadvantages of both?
Sure, I can take that one first. Full disclosure, I work for one of the big banks. I would say with credit unions, it's obviously a smaller footprint. Say for maybe Navy, Federal Credit Union, or a couple other ones, they don't have as big of a footprint. But if you have a personal relationship with your neighborhood credit union, you may be able to get a good deal. Now, on the flip side, we look into the big banks. Because they have a larger and more nationwide presence, they may have deeper relationships with specific dealerships, especially the franchise dealerships, the ones that, the Toyota of Houston, or, and those may play to your advantage because those existing relationships may end up getting you a better deal. I think in this case, it doesn't hurt to shop around, like we mentioned earlier. An auto loan is an auto loan, and the best deal that you can get, it doesn't really matter who you have it with, whether it's a big bank or a credit union.
I will say that with the big banks, if you're looking for a used car, a lot of them, I definitely know that Chase has specific banks that they have to have had vetted and partnered with. Or dealerships that they've had to have vetted and partnered with in order to finance cars from those dealerships. So, if you were trying to go to a small mom and pop shop and with, a big bank, they might not approve that loan because they don't have a relationship with them. They don't know the quality of the vehicle or something like that. Now, a credit union, they're going to finance you. And so it doesn't really matter where you are getting the car from, so it could be from CarMax, it could be from, Sterling McCall Nissan, it could also be from, Joe's Used Cars. And so it just kind of depends on, where you're trying to buy your car from and how much you're looking to finance.
Okay, next question here is a personal example. I'm currently leasing a car and the lease is up soon and want to transition to purchasing a car. Am I able to trade in my lease car and use the equity as part of my down payment? And will a different brand dealership purchase my lease? So for example, if it's a Subaru, can a Toyota dealership purchase the lease vehicle?
My understanding is no. If you're trying to get into another car, or definitely not another dealership. This is what I kind of said before. If you're leasing, you don't have any equity in the vehicle. The lease is basically a rental. So when the lease is up, unless you're purchasing that vehicle at that dealership, that's it. So there's no trading in equity or anything like that. Now maybe the dealership that you're leasing from will allow you to use that equity to buy another car, but they're going to see it as, you were leasing this car, and you put all the miles on it, you put all the wear and tear on it. This is the one that you're going to be going for. But I really don't deal much in leases, so maybe Albert has a different viewpoint. But another dealership, I don't think is going to buy your other lease.
Yeah, exactly. I think you'd get a lot better luck or opportunity going back to the same dealership that you had the lease with, because you've already created that established relationship. If you go to a different dealer, you can be thought of like, hey, here's a random buyer that doesn't even fully own the vehicle, is just a fancy rental, like Eduardo mentioned. I don't really see the trade in equity. But if you go back to the same dealer, you kind of explain the situation. You may be able to leverage the lease that you have had and, bundling or rolling it over somehow into an actual car purchase that you make at that same dealership.
Mm-hmm.
Perfect. Thank you both. Next question here. Tactically, should one negotiate the price of the car first, then raise the issue of financing?
Yeah, I mean, financing won't be discussed until the price of the vehicle is settled, because you can't, at least if you're going to the dealership to finance a vehicle without your own financing, all the terms are going to be decided based on, the price of the vehicle plus the taxes and the registration fees and title fees, plus any other add-ons that you might purchase as well. Yeah, you definitely need to know the price of the car before the financing terms are set.
Yeah, I would think of it as, instead of one negotiation, there's really a 4-part negotiation that happens in the car buying process. So the first part is exactly like you mentioned, is you negotiate the vehicle itself, or the front end part of the loan. And then if, say, you have a trade-in, you're also going to be negotiating the value of your trade-in. So that's the second part of the negotiation. And the third part of the negotiation is you're going to be negotiating your monthly payment and what your budget looks like. And that's where you get into the terms and conditions. And then the fourth part are any add-on products that you might buy, such as gap insurance or extended warranties. So definitely there is like a sequence to it, but I wouldn't think of, hey, I'm doing, one negotiation, then I'm done. It's really a multi-part negotiation process that happens.
Thank you both. Next question I have here, where should I go when buying a used car, and what are the different options?
So for used cars, there's a lot of marketplaces online like Car Gurus, carsforsale.com. They're remarketing platforms for used car dealers that might not have, the might of Toyota behind them to do all the advertising. You obviously have CarMax, which is, the largest used car retailer in the nation. If you're still in Texas, that you drive by the one on 59, there's hundreds of cars on the lot that you can choose from, and they have their own financing and offer good rates and, good warranties and deals. But say you don't want to go to CarMax because you think the prices are too high, you can go to Car Gurus, and Car Gurus has a tool that basically matches the price of the same car against every dealership that's posted on that platform. So if you're looking for a 2015 Toyota RAV4, you can look at all the 2015 Toyota RAV4s that are out there, and they'll sort it by price, mileage, quality, color, whatever you want. So those are options. You can also go to the franchise stores and go to the used car department. The issue is, or one of the issues is that, used car inventory, it's kind of what's available. So if you're looking for a specific thing, you're going to have to do some research to find it. You can't just walk up to a dealership and say, hey, I'm looking for this, because if you haven't checked before, they might not have it, I've noticed a trend of a lot of car buyers, doing their research online before they even go to the dealership, researching reviews, the history reports, checking the mileage, and all that stuff before they go on there. So, I would start online, see what you can find, see what you want first, and see where you can find it. So, you might not find a car, if you're in Texas, you might not find it in Houston or wherever you're living, but it might be a city over or state over. And then, you can call a dealership and try to negotiate transportation or anything like that. But definitely, for me, start online and then go from there.
Yeah, definitely. I think, compared to 5 or, even 2 years ago, we have a plethora of like online tools that help you, find the vehicle that you're looking for on that's actually like sitting on the dealership lot, so that you can contact that dealer and say, hey, I'm interested in this specific vehicle. Then you can even look into your financing options before you even step foot into the dealership. One thing to keep in mind is, depending on the used car dealer that you go with, they may have a fixed price model or not. And basically what fixed price means is kind of like CarMax, the price you see is the price that you're going to get, and they don't really negotiate on the price. Now, some people really like that because they take the hassle out of negotiation, which can be a very emotionally exhausting process. But I know others really like getting a good deal and maximizing, any leverage they may have with an extra down payment or their own financing. So it's also important to look into what is the business model of the used car dealership that you're going in, just to make sure that you understand what what opportunities you have to negotiate or not negotiate.
Yep, perfect. Great. Good points. Yeah. Next question I have here: how important is it to test drive a car before buying? Eduardo, you might have experience with this one too.
Yeah.
Are dealerships handling the test drive buying process during COVID?
Test drives are, I think, the most important part of the car buying process, apart from negotiating price and everything, because when you test drive it, you really get a feel for the car. And that goes for new cars and used cars. Obviously, with new cars, you're just looking to see, hey, is this a comfortable drive for me, right? Is this something that I want? You might have it in your head that you want a 2021 Dodge Charger, and then you get in the Dodge Charger and you realize you can't see anything outside of the car, and it's uncomfortable, and it's just a flashy look. So it's like, well, maybe I want something else. Maybe I want something more space. With the used car, it's definitely very important to do a test drive, because on the test drive you'll notice anything that might be off, right? You'll drive, you'll see, is the check engine light on? That's usually a red flag. Does it feel like the brakes need to be replaced? Is there any weird noises coming from the motor or from anywhere in the car? Is something rattling? You really get a feel for what the status of the car is when you're buying it. And then, with that, you can say, hey, I noticed this, I noticed that. And you can use those as negotiation tactics when discussing the price on a used car. Obviously, if you're going somewhere like CarMax, where they have fixed price, you can, see if these things are going to be taken care of. And depending on where you're at, either CarMax or, any other used car dealership, they might say the car is as is, and then you kind of, go from there on what you want to do. But the test drive is incredibly important. Right now, with our dealership, we're still doing test drives. You have to have a mask on, and we clean the cars after each test drive, just for safety and sanitary precautions, as the pandemic is still going on. But yeah, every dealership, if they don't want you to test drive, that's usually a red flag. So you should be able and should test drive every car that you're going to get, new or used.
Exactly. I think buying a car is a really large purchase, and you want to be comfortable in it, both from the financial perspective, but also literally from using the car every day to go to work, to go on trips. Definitely recommend taking it for a test drive before signing on the line.
Agreed, for sure. So you both talked about the best platforms for used cars. Do you have, what platforms are available for getting the best prices for new cars?
For new cars, I mean, you're going to be going to a franchise dealership, and so it's just seeing what kind of car you want to get. And then you can check the current inventory of the store on their websites. If you want a Toyota, then you go to, Sterling McCall Toyota or whatever McCall Toyota, and they'll have their inventory there, and you can go and schedule a test drive for the cars to see which one you like best. The new inventory is pretty easy. Even if that dealership doesn't have it, as long as they're part of a network like AutoNation's a huge network, right? And so they can have cars transported to their dealership for you to see. If you want a specific color or a specific model that they might not have there, they can get it there. New cars is pretty easy to find.
Yeah, definitely. And the inventory, like in the platform sites that we mentioned, they have new vehicles as well as used vehicles. Just because certain dealerships only sell used vehicles doesn't mean that the platforms themselves don't have any new vehicles. So you can definitely use similar ones to find the new car that you're looking for.
Great. Next question here. I want to set up an appointment with my bank, but don't want to commit to anything as I want to shop around and see what other offers I can get for financing. Can you shop around for a deal and come back to a previous offer? Is that a common practice?
Usually the bank will give you like a time limit on the offer. I think Albert can speak more to that, but a lot of with the auto lenders that we deal with, they'll give an approval and say this offer is good through, X date. It's usually 2 or 3 weeks or something like that. But I don't know, Albert, if you have a different experience or can add more to that.
Yeah, definitely. I know Capital One as well as other banks have entire a suite of tools built out for pre-approvals and pre-qualifications. And generally those are valid for up to 30 days. So you can go, shop around, and whatever, price and the rate that you get is going to be locked in for up to 4 weeks. And that gives you flexibility in looking into, other banks that you may be interested in, or potentially looking into other cars, because you can go to your bank, you can say, hey, I'm interested in a Honda CRV. They'll give you a pre-approval and kind of what the rate is going to be, but you can come back in 2 weeks and say, hey, I've actually switched my mind. I want something a little more sporty, like I want that Maserati that Eduardo mentioned, and then it can also, give you the rate for that more the different car that you're interested in.
Perfect. And it looks like we have a few questions in regards to warranties. What types of warranties do you recommend to get when buying a used car? And is the price of the warranty included in the price of the car if financing, or must warranties fees be paid up front?
So there's a difference between extended warranty and service contracts. So service contracts is usually what you're going to be getting with a used car. A warranty pertains to the manufacturer of the dealership offering a warranty on the vehicle. And so, a lot of dealerships might offer like a 30-day warranty, but a service contract is an aftermarket purchase or a post-sale purchase, meaning that it's not included in the price of the car. And so what I would say about the service contracts is, understand what the terms of the service contracts are, how long your coverage is going to be, how much it's going to cost, what your deductible is, how much the service contract is going to pay out, how much is left, and some of them, you might have $5,000 allotted to that service contract, right? And you get a used car, and unfortunately something happens and the motor goes out, right? And depending on the car that you have, and depending on where you take it, the repairs might exceed that $5,000. So, and you already have like $100 deductible. So that's what I would, recommend whenever you're shopping for those products is to understand what the terms are, how much they're going to be paying out. Sometimes they break it into the types of repairs, so they'll have an allotted amount for motors, an allotted amount for a transmission, an allotted amount for the cooling system, electrical. Also, yeah, check to see what is covered. And then understand what's not covered, right? So regular maintenance items like oil changes, brake pads, rotors, those are not covered under a service contract because they're considered, and spark plugs because they're considered regular maintenance, things that you're supposed to do over the course of owning a car to maintain it at the manufacturer standards. And so the important thing is really just to understand the terms and how much you're going to be paying for it, because if you're going through a bank to finance, that'll be added on to the term. So you might not have to pay it up front. You can pay it separately. It'll probably cost you between, if you're looking for a year to 5 years service contract, can cost you anywhere between $1,000 to $3,500, depending on the car. And then some cars, depending on the make and model and mileage, might not be covered by a service contract. So if you're looking at, a 2011 Mercedes GLK 550 with 170,000 miles, they might see that as too risky of a car to cover, and you might not get coverage on that car. So, it's also important to understand which cars you're going to be going for are going to be covered.
Yeah, exactly. I think just read the fine print and understand all the details that come with warranty and the vehicle service contracts. They can be, helpful peace of mind, just in case like something does break. You don't have to, shell out a few $1,000s for, a new motor or a new transmission. And usually these things are bundled into the auto loan, so you're paying it as part of that monthly payment throughout the life of the loan.
And that's not to say don't get a service contract, because I highly recommend them. I bought one with my car, right? Because, I just want to be protected. Because worst case scenario, your engine goes out, you're looking to spend, again, depending on where you take it, between, $3,000 to $8,000, sometimes $15,000, depending on the car. If you're looking at a 2012 BMW X5 with the twin turbo motor, if you take it to the dealer, they're going to be charging you close to $16,000, 18, maybe 20 to fix it, because you also have to look at the labor rates of the repair facility, and then what kind of motor they're going to be putting it in. So it's also important to understand that if you take it to a franchise dealership, they're going to be putting in a new motor, and they're going to be charging you their, $120, $140 labor rate. If you take it to a mechanic, he might cut you a deal, charge you $80 an hour. He could find a used motor and save you significantly on that. You find one with low miles. And that's typically what the service contract companies will want you to do to keep the cost down. And then, just look at it from that perspective. But a service contract is definitely worth it, especially buying a used car, just because you don't know how the person that had it before you treated it. So, you might treat it perfectly, and unfortunately, because of how the previous owner or the previous two owners treated it, you might suffer the consequences of that. And that's not the dealership's fault that sold it to you or anything like that. It's just, that's why it's important to look at the service history and make sure that the car has been taken care of. It's also important to understand that, you do have to show that you've been maintaining the vehicle for the service contract to take in effect. Because if you buy a car and then a year later you don't get an oil change and the motor goes out, the service contract company is going to say that you were negligent and not pay out anything. And then you're stuck with a car that you're financing with X amount of repairs that you're gonna have to do to it.
All good points. Thank you both. We have about 5 minutes left here, so I think we have enough time for a couple more questions. So let's transition over to negotiation for a little bit. What price negotiation techniques do you recommend when buying a used car? And is it harder or easier to negotiate, given that there is only usually one of that specific car?
So the more information you have, the better you're going to be prepared to negotiate. So understanding what, the average price of the car that you're going to get, especially with a new car, with a used car, is beneficial. When you go to buy a car is also kind of important, especially with the new car stores, because new car stores, they have quotas that they have to meet in sales for the manufacturer. And so towards the end of the month, they're more willing to cut a deal because they might need to make their sales quota, because the manufacturer pays out a bonus to the dealership, and they often use that bonus to cover costs, salaries, bonuses to the salesmen. And so, if you're looking to buy a car, a new car, typically if you go the last week, you're probably going to get a better deal than if you go at the beginning of the month. And like I mentioned before, with a used car, on the test drive, find things that you might think are problematic or want to get fixed, or the brake pads are starting to show signs of needing to be changed soon, or the rotors, the rotors you can definitely feel, because it'll feel like you're kind of, when you're braking, you'll feel it not jumping, but it's like a wavy feel. Use that as either a tactic to get that fixed, or if they can drop the price. And then, you see that the average price of, car is X, but this dealership is charging, $1,000, $2,000, $3,000 over that. You can either use that as a negotiation to try to get the price down, or just realize that, maybe you want to go to the other place that has the better offer. But yeah, I mean, that's the easiest thing you can do is just ask, and keep asking. And then, just use the information you have to kind of present why you think you should, have a lower price in the vehicle, and that can help you. And whenever you're going to a new car store or a used car store, but then also, like Albert said earlier, understand the business model of the dealership that you're buying it from, because if it's a fixed price, there's no negotiation going on at all. And so that's what I would recommend.
Great points. I've got nothing to add to that.
Perfect, thank you. I think we have time for one more question here. Let's see. How would you offer for the value of a trade-in vehicle change if the owner has records, so receipts and bills of sale with descriptions of maintenance done for the vehicle?
I mean, you can show me what you paid for the car. That's not going to change how much the car is worth at the time. You have to realize that whenever you're trading in a car, you're not going to be getting the retail price, because the dealership needs to sell it at the retail price. You're going to be getting it at the wholesale price. And so, you might see Kelley Blue Book, which is not a great tool to value your vehicle because it often overvalues cars. And so it leads buyers to be disappointed whenever they go into the dealership. You might think, wow, KBB says that my car's worth $20,000. And then you go into the dealership, every dealership has their own pricing tools. And they're, kind of specific to the area that they're in. And, they might say, well, your car's worth $12,000. And you're like, wait, where's this $8,000 that I'm expecting? And so, but I mean, as long as you have like a clean car, little to no damage, or the damage has been repaired and it wasn't structural damage, meaning that the frame wasn't damaged, airbags didn't deploy, you have a really strong service history on it, the interior is in good condition, you should get a really strong offer from the dealership. Especially right now, there's a shortage of quality used inventory out there. So, the market is really high to buy used inventory from the auctions and from customers. So, you can get a really strong offer, and I would recommend trading in your car instead of selling it and using that cash to buy another car, just because of the tax credit. At least in Texas and a lot of states, you get a tax credit for trading in your vehicle, meaning that instead of being taxed on, $20,000, which is the sticker price of the car, if your car is worth $10,000, then you're going to be taxed on the $20,000 minus the $10,000 worth of vehicle, so that you're going to actually be taxed on $10,000, and that reduces your costs overall. But yeah, I mean, the better condition your car is, definitely get it clean before you go into the dealership, because that is an indication to the dealer that you're somebody that takes care of the vehicle. If you show up and there's bags of fast food all over the place and the car's a mess and there's stains everywhere and the cup holders are all sticky, and they're not going to give you a really good offer. So presentation is pretty important too. But yeah, just and then shop around, right? One thing I recommend people to do is to, CarMax gives you same day offers to buy a car. So you go to a dealership. I actually told my dad to do this a few months ago when he was buying a new car. He was looking to trade in, and the dealership gave him a trade-in credit. I think it was of like $17,000. And I told him, okay, well, go to CarMax, go to Texas Direct Auto, and get cash offers. And they both offered them around like $19,000. And he brought those offers back to the dealership, and the dealership, after some negotiation, ended up giving him a trade-in credit of $20,000. So, the dealership wants the car. Obviously, at first glance, we're going to try to, give you what we want to pay for it. But, if we really want that unit, we're going to be willing to negotiate and pay it, especially if it's low mile vehicle. It's really well maintained, has good service history. That's very valuable. Just because you can sell that a lot faster, you can mark it up more. But yeah, definitely don't be alarmed if the values that you're getting on your car online don't match what the dealership is offering you on trade.
Perfect. I think we are over time now, actually. So I want to thank you both, Albert and Eduardo, for being here, and thank you for everybody who attended. There will be a recording of this webinar on our video vaults, which you can find on our Rice alumni webpage at alumni.rice.edu. Next month, we will have our final Young Alumni Life Series session of the spring semester, and that will focus on young alumni and entrepreneurship. So once again, thank you both for attending. And just to remind everybody, there is a survey after this webinar. So we'd love to hear from you on your thoughts about this webinar and other ideas you'd like to share, future webinar topics that you'd like to see for the Young Alumni Life Series. Thank you both for being here, and thank you, everybody. Have a good day.
Thank you.
Thank you. Bye.
Thank you.